Welcome back to the last episode of the Issuer Academy for 2025. I'm your host, Merusha Naidu, and today we have a special episode for you. Over the past year, our guests have helped us peer into the future of issuing, from how AI will reshape the payments industry to what the next generation of cards will really look like, to the evolving needs of SMEs and regional shifts transforming payments ecosystems across the world. This episode is a curated collection of the standout moments, the bold ideas, and sharp insights that shaped future predictions for the world of payments. You'll hear the moments that challenged assumptions and revealed where this industry is really headed. So whether you're building what's next or simply curious about the forces redefining payments, settle in for the very best of the Issuer Academy's future-focused conversations. Let's dive right in. The payments landscape is changing fast, faster than most of us can keep up with. So I wanted to put Paul Truman, former EVP at Mastercard, and Stephen Bow, our very own CPO at Paymentology, on the spot. I asked them to make their boldest predictions and maybe even what they would bet their badges on. So, looking to the future, Paul, let's fast forward to 2030. What is one prediction you'd bet your badge on for the future of cybersecurity and payments?
Hence what the badge is. Is it my Boy Scout badge?
It might be.
I think the payment industry is undergoing seismic shift. There's technology innovation, there's regulatory advances, there's tectonic shifts in you've just seen some big announcements to speak of, buying and selling and moving companies and issuer focus versus acquirer focus, that's going. And then at the same time, you've got the consumer and business requiring different things. I think all of that's going to happen. I think a lot will change. I said, all I want to remain focused on is keep an open mind as to the opportunity. If you see a headwind, work with it because it can help you resolve the problems, and keep an eye on what is the unintended consequences. Because if you do that, you'll have thought of both sides of the equation, the value will come out.
And Stephen, are we still swiping in 2030, or will the card as we know it vanish into the background?
I certainly think the plastic probably will be less relevant, but I actually think card payments will become even more ubiquitous. They'll be used in all sorts of different use cases. And so it won't just be kind of that sort of the traditional transaction where you go into a shop and make a payment physically. It'll be actually all sorts of different use cases for the card. And I think the card will become this sort of digital representation in our minds about how we connect a payment to a kind of source of funding, to an outcome.
Yeah. And maybe by 2030 or maybe 2040, our kids won't even look at a card. They'll just say, okay, well, I'm going to use my watch to make this payment, so who knows?
My kids looked at a card now, I'd be surprised. But to my point is, the card is, you're thinking about it being a physical, but it's a manifestation, it's digital. There is a card or equivalent of card, a secure token on their phone that connects them to their device, to their payment. So the bond is there.
In this segment, I asked Carl Raven, Head of Issuer Enablers at Visa, and Thomas B. Norman, Product Director at Paymentology, to share their predictions for the next 12 to 18 months in card issuing. For me, the key takeaway is clear. In a world where customer expectations and regulatory demands are constantly evolving, standing still is not an option. With everything changing from user behaviors to regulatory expectations, what's next in the world of issuing? To both of you, what's one unutilized product feature or infrastructure decision that more issuers should be thinking about right now if they want to really stand out? And I would say within the next 12 to 18 months.
We've spoken about a lot of different products today. You mentioned the Flex card earlier. I mean, we believe that definitely is the direction of the market. Since we announced flexible credential. So definitely think that will be one. I actually think, I'm answering in a slightly different way, I actually think the ones who don't innovate will be left behind. So I think it will be, if you don't look at how can you keep up with that innovation, but etc., then you'll be left behind, but in a negative way, which is a slightly different take of the question. So apologies.
No, I think that's fantastic because you're right. It's no longer about loyalty. It's about how the features that you're giving customers access to. And if they don't innovate, customers will move. That's the reality. And I think it's very important for everyone to acknowledge that reality.
And then you'll stand out, but in a not the way that you want to stand out. Yeah.
You're the what not to do.
And the bar is constantly moving, right? So what was good enough today is not good enough tomorrow.
Well, let's hope it's not tomorrow. Maybe it's 18 months. Thomas, from you, what do you think underutilized products?
Next 12 to 18 months, that's in banking, that's short term, right? So I think I'll go with transaction controls. I think it's a very, very strong offering that is heavily underutilized. And again, because of the shift towards tokenization, and we're moving towards a short-term future where basically all cars stored on file or all e-commerce transactions will be tokenized. And then when you can do transaction controls on a token level, that essentially means that you can put into the hands of the cardholder a merchant level transaction control or spend limits or spend alerts. So for all parents out there who are frustrated that their kid has bought, green jewels in some game for $4,000, that can actually quite easily be stopped, right? Or you can even, on my Garmin phone, I'm having a nights out with my mates. I can, put a limit, so make sure I don't spend too much. It is possible today, but too few issuers have actually bothered implementing this.
To kick off this next section, I wanted to ask Christian Rao, Senior Vice President of Crypto and FinTech Enablement for Mastercard, and Jeff Parker to look into the future with me. What are your predictions for the next 2 to 3 years and beyond? Looking, past 2030, where do you see the industry moving to? What trends do you yourself see being the most relevant?
Let me pick one, which is commercial payments. I think a lot of the themes that we discussed implicitly focus on consumer, or explicitly, right? In examples we cited, refer to consumer to merchant payments. You're using your iPhone at the Marks and Spencer, or you shop at an e-com merchant. And I feel a lot of the innovation and reduction of friction and streamlining that we've seen in the consumer to merchant payments is still due to happen in B2B payments. So yeah, businesses paying, getting paid. And I think there, I expect and I would hope that a lot of the innovation that we see, and it will be the themes we discussed, virtual cards, single-use cards, tokens, digital first solutions, all of these things will definitely change, innovate, and improve B2B payments. That's if I needed to say one thing, I think that's what I would pick.
I fully agree with you. I think we've been asked more for ICCP in the last couple of weeks than any other product. So fully agree with you. And I think there was actually a Mastercard study that said 70% of corporates are underserved globally. And that's a completely believable stat, because honestly, we see so many corporates saying we just don't have the right solution.
Yeah, and we also see, and I think it actually gets worse in the SME segment. And there are so many statistics for Europe, for the world, how important SMEs are to a vibrant local economy that benefits everyone. There's so many statistics how the prime sort of reason for these companies going out of business is liquidity, essentially. And by having fit-for-purpose financial services solutions, payment and beyond, right? And payment is a very flexible term in terms of, getting paid, getting a line of credit, and so on and so forth, can really be a strong tailwind for SMEs, and it can make their life so much easier focusing on their core business, whatever that may be.
Yeah, and especially since they don't have the capacity to have very, very onerous kind of operational processes. So the easier we can make it for these SMEs to have a seamless card experience or a seamless payments experience, I mean, that's what we should all be striving for.
Yeah.
So,
and I hear that in the sort of the Paymentology family, you have other, you're also looking at the other side of the business where you really focus on how do we drive payment acceptance for SMEs. And I think it's really these sort of the two sides of the coin, that for SMEs, how do I pay? How do I manage my liquidity, my capital, and how do I get paid? Getting this solution right, I think it's very important for the segment.
I think looking at that entire ecosystem for the SME. So how do they receive funds? How do they get paid out? How do they get funds kind of pre-approved, small lines of credit, that kind of thing? It's so important.
And we spoke about data and AI and all these things. And I think if you help processing payments for SMEs, it will give you such a rich data set to help them, with the right financial services at the right point in their development. Also, pricing a risk premium correctly and so on and so forth. So I think there's a lot of innovation that we will see in this part of the industry.
I love that. That is exactly what we were looking for. That insight is so valuable. Jeff, over to you. What are your predictions?
Look, so I think the SME piece is clearly a massive underserved market. I think we haven't touched on yet, but I think the cross-border component for SMEs is super interesting. It's a world I'm familiar with from previous kind of experience, and I think there's still lots of improvements to be done to simplify that.
Next, let's turn our attention to Saudi Arabia, a market we established our commercial registration in earlier this year and celebrated our partnership with Injas. In this segment, Berche Arslan, Vice President, Fintech Business Development in EMEA at Mastercard, and Jeff Parker share their insights on the trends shaping the region. For fintechs entering Saudi, what's one integration they should, start with, one program? What's the one thing that you wish every Saudi fintech to actually, took heed and launched?
Well, so I think, I'm quite interested in the global trends as well that are taking place. So over the past few years, we've been hearing a lot about crypto and about stablecoin now, which is the common theme across a lot of the events. But also now we're seeing more and more agentic commerce. And I think that's going to be playing a really big role in the next few years. And so when I think about the future, I would say that the fintechs should start to look at other parts of the world, see what's been growing in those markets as well, and really start to embed some of those solutions as part of their consumer journey as well. I don't think Saudi necessarily has to follow, but I think they can actually be the leader in some of this as well.
Absolutely. So let's not try to, remake the wheel. Let's take what we have, learn from it, and grow. And I think that's where Saudi does really, really well. They look at what's around, what's globally trending, and then they just make it better, right? So continue. So let's start off with some quick fire predictions. Berche, by next year, the first digital payment touch point for new Saudi users will be ...
I do believe that there might be some evolution around national identity and wallets. And I think the two coming together will drive some sort of evolution as well. And I think we're seeing that in other parts of the world coming together and kind of bridging a more seamless consumer experience as well. So I think that's probably the next fold of innovation that we're going to see in Saudi.
Absolutely. And Jeff, to you, what is the most underestimated KPI for issuers in KSA this year?
I guess if we're following the trend of wallets and tokenization, I would say time to first tokenized transaction.
In this segment, we headed to Cape Town in South Africa and dove into the mindset shifts shaping the future of finance with Lida Gliptis, renowned author and advisor, Pauline Molloy, Chief Product and Innovation Officer at OM Bank, and Anna Pora, Paymentology's Chief Revenue Officer. We explore the strategies and principles that would drive truly resilient, inclusive, and future-ready financial systems. So when we look at designing systems for the future, looking ahead, financial systems have to be resilient, they have to be inclusive, and they have to be deeply connected to the communities that they serve, especially in fast-changing markets like South Africa. PayShap is another example. Pauline, what's one operational mindset shift you believe South African banks must embrace to stay truly future-ready?
I think my thought on that is is let's stop underestimating your customer. That is, we often think because adoption on certain things are slow, therefore customers cannot adopt. And I always think about, like, when I grew up, used to go to the bank, we go to the bank branch with my mom to draw cash, right? And when ATMs came, those things were pretty damn intimidating. And for the best part of his life, my father thought that the money came out of the biscuit tin that my mother put the cash in after she'd gone to the ATM. And it was after my mother passed, quite a tutorial that my brother had to undertake with my dad to get him into the world of drawing cash at an ATM. But people can learn. People absolutely can. And they overcome the hurdles. There are plenty of examples where we've seen things in the marketplace that aren't super simple, but the utility of them has been so powerful that people teach each other. Right? Which is why I raised earlier is that kind of like common ways of interfacing and interacting are super important to help those processes along. But don't leave people behind. Don't underestimate that people can't learn. It's not a thing. You don't know how to teach.
I absolutely love that. Anna, looking ahead, what's the biggest untapped opportunity you believe payment companies should focus on to better serve emerging markets like South Africa?
I think it's around access to credit. It's really about finding the right models that address the different pockets of the populations that might not have the most traditional, I guess, topography of information accessible to the banks and the financial institutions. So really identifying those decisioning models that have broader reach and then enable the access to credit to the broader parts of the population as well.
Absolutely. And credit, again, because not many people in South Africa actually have access to credit. So building very simple BNPL solutions to start off with, figuring out how to even create a credit score for somebody who's never had credit in the past, while at the same time looking at how do you drive revenue from the very start. All of these things are actually critical. And so credit is the key to unlocking all of that.
Very controlled and secure way. So you parallel the access to credit with a lot of education around how that credit should be used and the impacts and the broader consequences, etc. So those two things need to be done in parallel.
Couldn't agree more. And Lida, you've witnessed multiple waves of innovation. What's the one principle or mindset that should guide the next decade of the fintech evolution and, new digital banks that are coming up?
I make my tech teams cringe when I say this, but the tech doesn't matter. The tech is absolutely irrelevant in its essence, its utility.
Yes.
So don't lose your head. Don't get emotionally attached to any tool. Use anything and everything that comes your way that allows you to deliver against all the things we're talking about. That means several things. It means that if you are partnering with someone who starts describing their solution, starting with their tech choice, run, because they will not be able to evergreen that choice. They will be too emotionally attached to a particular posture. But it also means that your mission and your commitment to delivering for your clients in a particular vertical are the only things in your business that won't change. Every technical component, every technology choice should be swappable outable. New word.
Swappable output. I'm going to quote that.
Yeah. I have to do it slowly. Nothing is essential other than what you're using it for. And it's a massive mindset change, particularly because of the way we've bought technology for such a long time. People have come into the space because they were particularly inspired by a thing. And it was API first for a while, and then it became DLT for a while. And now you're hearing so many people telling you that their solution is AI powered before they tell you what it does. I don't care. What I care about is how it helps me deliver against everything we're talking about. So not being emotionally attached to any particular technology and anticipating 100% that what you need is an evergreen, scalable, resilient stack. And that means that as the world changes, you'll be swapping everything out. And so every decision you make needs to be made on the assumption that your partners will stay if they continue delivering for you, but the components and how they talk to each other won't be there for long. That changes the way you operationalize everything.
It has to be a constant evolution. That change beneath the change needs to be happening continuously as you grow and as you scale. Couldn't have said it better myself.
Next, I asked Adam Battersby, partner at Apis Partners, and Joy McKnight, award-winning journalist, to look ahead at the next 5 years of inclusive finance. We explored how AI, digital ID, and open finance could fundamentally transform access to financial services. And I wanted to hear from them which innovations will really make a difference in democratizing finance globally. Looking forward, the next wave of inclusion could come from entirely new tools like AI, digital ID, which we've spoken about, or tokenization. Adam, if you had to pick one kind of investment that will have the biggest impact on inclusion globally over the next 5 years, what would it be?
I think when we take that much of a step back and look that far forward, it has to be AI. Right? AI has that potential to lower the cost to serve. One of the hottest topics we probably discussed in this in this discussion, but it goes much more than that. It can onboard people faster, cheaper. It can automate that process of customer verification we're discussing. It can help with the credit underwriting using data and the AI models to extend that credit responsibly is the important aspect to that. But to those people that you were just discussing without those traditional histories. I mean, on the customer service side, so once you've got that customer, you then need to maintain them, how you lower the cost to support them. But I think, again, we're a little bit nuanced in this. Like we look at the current footprint of portfolio companies. Many of them are already using AI. They've actually got this massive advantage against some of the incumbents we're talking about, the banks and so on, because these are digital first companies. They're not AI native companies. I will draw that line. But being a digitally first company means you've got the data, you've got the analytics to extract this value of AI. So we actually think they're interestingly positioned, but we know we'll see transformational change in this sector going forward. I think that the final pieces, so AI is reducing costs, creating efficiency, servicing customers better. It's this concept of personalization, right? Can we tailor the product even more to that individual customer? And, you know, that's one that maybe we see quite strongly coming out of the democratization of finance. You know, how do we get appropriate savings advice, lending advice, insurance advice into customers' hands? And then one of the things we're getting increasingly excited about at Apis is agentic AI. So not only using it for the credit scoring, but can it be used in an appropriate way for decision making and actually taking actions through the use of agentic AI? So I think when you package that all together, there will be exciting new companies. There will be exciting existing fintechs that are able to leverage this quicker. And maybe I'll be wrong. Maybe there'll be some incumbents that actually find ways to adopt AI to transform their business models as well.
Absolutely. I think we're seeing AI, like we've been saying, changing the game in lots of different areas. And I think the players who are doing really well, like you just said, are the companies who are already digital first. They have been investing in data. They do have data lakes. Now it's about saying, okay, how do I extract the right data, the right insight, right? And so you're absolutely spot on. And Joy, same question for you. What trend or technology do you think will most deepen the democratization of finance?
Well, I do agree about AI, obviously. AI is going to change the world, right? But I was on this panel, but the question posed was sort of like, oh, when we have agentic AI, then everyone will be smarter. And I was a bit like, well, no one will be smarter, actually, because you've just outsourced the decision to something else. So I think financial literacy is super important. And you can use AI to increase financial literacy and all that kind of stuff. But I think that that's something that we can't leave out of the equation because, you know, we need to be able to hold, you know, the agentic AI to account in some ways. The other thing I just wanted to mention, like obviously I was really big on digital identity throughout this whole podcast, but the other thing is open banking / finance. Like I do think that open banking obviously has gone a certain way in sort of starting to democratize finance across the board, etc. But I do think the idea that move to open finance, where you actually have all your financial health, you can actually ascertain everything. I think that will make a huge difference going forward. So I think, yeah, that would be my 2 cents on it.
Next up, we heard from Godfrey Sullivan and Jeff Parker as they shared the one thing they wish more fintech founders understood about the Middle Eastern region. So finish the sentence. The one thing I wish more fintech founders in Samir understood is ... Godfrey, we'll start with you.
We work with 1,600 issuers across our SAMEA region, and they're at various stages of evolution. But for us, the fintech community was so important. And about 2 years ago, we launched something called the Africa Fintech Accelerator, where we reached out to the fintechs. There's about 3,000 of them across Africa, many coming, emerging every day. Because what we were finding was you had entrepreneurs with incredible ideas, incredible energy, but just not really a very deep understanding of risk management or compliance or how to engage with a payment network. And so we've set up this program where each 6 months we mentor 20 of these fintechs to teach them about payments and help those businesses accelerate, because they're really important parts of the ecosystem. I think one of the biggest challenges across the region is one of scale. And thinking from the outset, is the segment that I'm aiming for large enough where I can achieve the right levels of economies of scale and ensure a kind of profitable, growing business? And it's tough in a market with 86 different regulators, and you need a license, and you want to get a license, it can take you 1.5 years, and you have to go through all the loops of that. And so seeing from the outset, is this a product that's in a sufficiently large market with a significantly large segment where I can really get to that scale? So thinking about that is at the forefront is probably the number one point I would suggest.
Or join the Visa Accelerator program.
Absolutely.
Effie Hadziadanu, COO at Snappi, shared insights into why understanding payments matters for everyone and how customers should be able to engage safely and confidently with financial services. So let's talk about what your customers are really going to feel. What's in store for your customers over the next 6 months?
Okay, so we are going into consumer lending. We are going into investment products.
Amazing.
And we are also, savings accounts and stuff like that. What we already offer, let me say that again, we offer real-time payments. We actually offer all the array, let's say, of payments, credit transfers, direct debits, whatever, card payments, of course, and also buy now, pay later, which is something a bit new. And it's not so new in Greece because there is a company that offers that already. But when it comes to banks, we are the first bank to offer buy now, pay later. This is what we offer. So we within next year, the things that will come are those that I have mentioned: investment products, consumer lending, and various saving products.
I think
it's for everyone.
And with the speed of adoption that you've seen in Greece, it's so important, and I think it's really lacking in most parts of Europe. So you're positioning yourselves as a real thought leader, aren't you, in payments more broadly, actually?
Yeah,
that's great.
And we could use that across the board. And I know I'm one of those people. Don't uninvite me now, but I'm one of those people who will give people a little payments lecture when something goes wrong and they go, I don't know what happened. It's like, well, let me tell you what happened. And the reality is nobody wants to hear it. Everyone goes, nobody cares, but they should.
Yes.
They should. They should absolutely care. And we find that because of everything is changing as quickly as we're discussing, it is incumbent upon all of us if you're a shop assistant, actually you need to understand what if a payment doesn't go through. You need to understand what the possible failure modes are, rather than putting it on the customer, which is what usually happens. It timed out, pay again. As a customer, you need to understand your rights. You need, and I'm not saying that everyone should walk away with a degree in finance, but actually understanding the basics of these are my rights. This is the exposure I may have. This is what this means in a place where you can ask the questions that make you feel stupid.
In a safe place.
You've said
absolutely.
Now, let's talk about a topic on everyone's mind: credit. In this section, we unpacked how credit has transformed from a one-size-fits-all product into something deeply personal. David Schipper from Datos Insights shared how hyper-personalized rewards and perks were responding to not just financial habits, but everyday behaviors and lifestyles. Let's look at the future of credit, because this is where it gets really exciting. David, if you project a few years out, what will modern credit mean to consumers? What innovations or shifts should digital banks be preparing for now?
So we've spoken a lot, about hyper-personalization, which is, kind of a buzzword, but really it's about, like Rob said, and we've been talking about, it's looking at what does an individual customer need and how can I automate those decisions? How can I automate those either perks or benefits or features in a way using the data in a very timely manner that is responsive to my client's specific needs and my cardholder specific needs, and that could be based on the type of transactions they're performing, or it could be based on other data that you're pulling in. So I think we're going to see more benefits and rewards and cash back being very personalized.
Yeah.
The other thing I think is that, and you talk about, or we've talked about, like who knows what's coming next, right? With innovations, Apple Pay was an example. In 6 months, there may be some new feature that everyone is excited about. And I think we'll start seeing, this will be led by a lot of neobanks and challenger banks, we'll start seeing kind of looking to more than just financial services, to really looking at how consumers are behaving in a normal setting. How are they using their phones? What social media are they using? How are they communicating with each other? How are they moving money between each other, not just to make purchases? And I think there will be very creative. I don't know what these are, right? I can't, I can't say for sure what's going to happen, but I believe that we'll start seeing a lot of creative ways to pull in everyday consumer behaviors into the credit card so that it's responsive not only to their needs, but also to kind of, it allows them to be the person that they want while still being a part of a group. We talk about hyper-personalization, but we also talk about a fluent card where, okay, this is me and this is what I am, but also I'm a part of this group.
Yeah.
It's so exciting, and credit is so exciting and continuing to change and growing so quickly that predicting what's coming next is hard, but I think it will be based on real consumer behaviors, not just financial, but also their lifestyles and other things.
Absolutely. I think that is definitely why credit is, a hot topic right now, because it's allowing people to be creative with their finances. And that's why it's one of the reasons why it's so, so exciting. This is a pivotal moment in financial services when we look at credit. Rob, can I ask you, how do you see pay credit evolving? And what's your vision for the future of flexible, customer-centric lending?
Okay. Well, David's given a great intro to that, because a lot of it is for us is around supporting how the market's going to evolve. So in that regard, it's a bit like, yes, within the products that our clients have launched, they've got a customer segment, but the ability to then say, okay, so all my customers fit in that group, or this group of customers, but actually maybe I'm going to start varying some of them, because yes, I've made these installment plan options available to them, or because we've got a cashback reward capability, but actually I might just start to personalize it a little bit more, slightly different variants. And the reason I'm going to do that is because it just suits this customer, what they're actually going to go through at the moment. So allowing the greater capability is definitely something we're doing.
Yeah.
we also, as I mentioned, we have this global footprint, and credit does vary. So this is also quite a key thing for us to say, okay, in Mexico, in Brazil, in Singapore, in Philippines, there are services launched, which means we'll just slightly vary our capabilities because we need to support our clients in different areas. But I think the last part I would say is that, similar as Dave has introduced it, is the use of data. And that is enabling very much, I love the customer-centric view. So it's giving them access to data to say, okay, you're going to give you choice in terms of if you manage your finances in this way, it's going to cost you a little bit more. This is a good option for you. You could reduce the cost. But also enabling our clients to make better decisions. Because ultimately, they are running their businesses and they have their customer segments. So the more data we can provide to them to help them decide, actually, maybe this would be a good feature to launch. I've tried this feature and actually this isn't so good. Allowing them to amend it over time to suit as the market evolves is a definitely key thing for us.
Absolutely.
Giving the access to data analytics.
To wrap up our discussion, let's hear from all of our regional directors at Paymentology, who shared the hard-earned lessons from their markets. Now, for all of our regional directors and, for our panel, I want to say, last words, right? So finish the sentence for me, please. To win in my region, the one thing fintechs and digital banks must understand about card programs is ... Now, I'm going to start with you.
So you have to design with intent, build with compliance, and localize with respect.
Love it. Nacho?
Yeah, I think you must understand from a card program is you're not issuing a card, a plastic, you're actually issuing an experience. The card is not a product, but it's really a conversation 24/7 with your client. And I think it's very important to understand that.
Absolutely. Julie?
Yeah, so I think a differentiated customer experience that really targets your customer segments. My children are at the beginning of their digital banking journey, and I asked them, why did you select that particular digital bank? And they said, saving pots, instant transfers to friends for, bar bills, restaurant bills, etc.
Mena, over to you.
They said it all. So I would want to add in that, so now, so like for them, to have a successful card program. And, fintech want to do a lot of things, right? So to select the right technology partner so that work with them to develop their product to provide those experience so that you can focus on your core business.
Absolutely. When to find the right technology partner, when to build, when to buy, when to partner. Absolutely key decisions that banks and fintechs need to make upfront. Critical. Alejandro?
Everybody said pretty much everything, except I think working with a regulator doesn't mean going back. It means actually that the regulators are looking after what is going out there and they're taking care of our end users.
Absolutely. And again, in LAC, we're seeing the Argentinian regulators do just that.
Yeah.
Focus on what does the customer need? Let's pivot. Let's change. Let's meet the market where there's a need. Fantastic. Thanks so much for listening this year. We've loved sharing these insights and conversations with you. And we can't wait to bring you even more in the year ahead. Happy holidays and catch you next year on the Issuer Academy.